Namai, we have one more important activity under budgeting, that is relating to preparation of flexible budgets. Flexible budgets. The compared to flexible budget, there's another budget concept called static budget. Under static budget, lamai, we prepare our budget numbers and figures for a specific output level. So let's say we are planning to produce 1,000 units. For the 1,000 units, we can prepare our budgets. But in case our actual output level, let's say reduced to 700 units, then your budget that you prepared for 1,000 units is totally irrelevant, because you can compare your actual output level of 700 units related cost with your budgeted figures which are prepared for 1,000 units output level. So accordingly, to overcome this issue, under flexible budgeting, we prepare budget numbers and figures for flexible output levels. So instead of preparing, let's say, for 1,000 units of output, we prepare budget numbers for different flexible quantities. For example, we can prepare budget numbers for 600 units. We can prepare budget numbers for if we produce 700 units. We can prepare flexible budgets if we produce for 800 units likewise, right? So that you prepare budgets numbers for flexible quantities, so that you can easily compare with your actual output level with the suitable flexible budgets. So when it comes to prepare these flexible budgets, it is very important that your all the cost elements should be classified as fixed cost elements and variable cost. So once you easily classify these fixed cost and variable cost items, you can easily and flexibly prepare these flexible budgets for different quantities, right? So let's see this particular activity, right? So the following data are related to manufacturing company. Its maximum capacity, let's say its full capacity level is 1,000 units. So this particular company maximum capacity is 1,000 units. Uh, and these are the other information, right? Direct material cost per unit is 150. So we can say it is variable cost per unit. Variable material cost per unit is 150 per unit. Variable labor cost 60 rupees per unit. Other variable expenses 20 rupee per unit. So at 60% capacity level, right? We know total capacity is 1,000 units. At 60% capacity level, company's factory overhead cost 36,000. Factory overhead cost 36,000. Out of this 36,000 factory cost, 30% is fixed. So it means balance 70% is variable. Now when it comes to selling and distribution overhead cost, at 60% capacity level, 42,000 selling and distribution cost is there. Out of this 42,000, 70% is fixed. Balance 30% is variable. Now you are required to prepare flexible budgets for production output levels at 60%, 80%, and 100% capacity level. So accordingly, on a static budget form, we prepare for we prepare budget numbers or budget figures for a specific or static output level. It may be 1000 or 800 or 700. But under flexible budget, we prepare budget numbers for different quantity levels, different flexible output levels. So that whenever our actual output level, we decide we can find out suitable budget to be compared. Right. So let's see accordingly how to prepare these flexible budgets for 60% output level, 80% output level, and 100% output level. So keep in your mind how to prepare flexible budgets. It is very important. You should be able to identify what are the variable costs and what are the fixed costs. Right. So let's see how to prepare these flexible budgets for three different outputs. So these are your inputs with data. Our maximum capacity level or our full capacity level is 1000 units. And these are per unit information. And these are the overhead costs, which are factory. And other one, non-manufacturing overhead costs. Part is fixed, part is variable. Okay, let's take this information to our worksheet. And I have taken this information to my Excel worksheet, right? So what I have put in this yellow color represents our input data that you found in this particular activity, right? So we have this input data, our full capacity level, 1000 units, and per unit information, direct material cost per unit 150, direct labor 60, other variable overhead expenses, other variable expenses per unit 20 rupees, and at 60% capacity level, factory overhead cost 36,000, out of which 30% fixed, 70% variable. As far as selling and distribution cost is concerned, it is 42,000 at 60% capacity level, out of which 70% fixing, 30% variable. So let's now prepare flexible budgets for three different outputs. So this is my very simple budget. So you can easily tackle this kind of question if it comes to exam, right? Okay. So let's put uh, units produced, right? If you are operating at 60%, right? How many units you will produce if you are operating at 60%? We can simply take 1000 quantity at full capacity level. I'll put it fixed by pressing F4 multiplied by our output level, our operating level. We are operating at 60%. So I hit enter. So we are producing 600 at 800, 80% output. It is 800 at 100%. It is 1000. So these are our actual. We are budgeted output level at different capacities, right? Okay. Now let's compute direct material cost. I told you for to prepare flexible budget, it is very important. You should know what are the cost elements that remain fixed and what are the cost elements that will vary. And we all know these direct material, direct labor, and other variable expense, all these costs are variable. So accordingly, so what is the total direct material cost at the 60%? Per unit is 150, per unit cost is 150. I make it fixed by pressing F4. So for 600 units, it will be this much. As far direct labor is concerned, per unit cost is 660. I'll put it at 4. And we are producing this many units. And as far other variable cost is concerned, per unit cost is 20 and How many units we produce at 60%? 600. So this is our direct material cost, direct labor cost and variable overhead cost at 60% output level. So I can simply drag it to other side. That's how I write my formulas. I can drag it to other side, other output levels. It will automatically compute, right? Then prime cost is the sum of these three cost elements, and I can drag it to other three parts, and I put it in bold. Then factory overhead cost, right? You can see at 60% capacity level, factory overhead cost is 36,000. Out of this 36,000 factory overhead cost, it is said 30% is fixed. So accordingly, what is the fixed factory overhead cost? Now my factory overhead cost, if it is fixed, that amount will remain constant, fixed for all the three output level, right? So factory overhead cost which is fixed is how much? 30,000 is the factory overhead cost, full factory overhead cost, of which this much 30% is fixed. 30% is fixed. So this fixed factory overhead cost, since it is fixed, it will remain constant for all the three output level. Then when it comes to variable overhead cost, so what is the variable factory overhead cost? 36,000 is the total overhead cost, out of which 70% is variable. So this is our variable overhead cost. Now this variable overhead cost will vary when it comes to 80% level. Because 60% level 25,200, if it is variable, so it will vary when it comes to 80% level. So how to compute for 80%? We can say this is for 60%, this is for 60%. I divide this by this one multiplied by this quantity. So according this is variable factory overhead cost. So I can drag it to the next part, right? Formula, it will automatically compute, right? That's how it works in Excel, right? No need to worry. Then this is my prime cost. These are my factory overheads. So then I can say total manufacturing cost. Total manufacturing cost is the sum of prime cost plus factory overhead. This is my total manufacturing cost. Then we can add, right, selling and distribution overhead costs. These are the costs that we usually charge to P&L. Selling and distribution overhead cost, right? At 60% it is 42,000. So then we can say, right, 60% 42,000, out of which 70% is fixed. So I can say 42,000 selling and distribution overhead cost, out of which this much is fixed. So that will remain constant for, because if it is fixed line, it will remain constant for all the different output levels. Three different output levels. But when it comes to variable selling and distribution cost, we can say these are total selling and distribution overhead costs, out of which 30% is variable. So these are variable selling and distribution overhead costs. This variable selling and distribution overhead cost will vary according to as and when you increase your output level. So for 60% this machine, how much is for 80%? Grade 5 mathematics. I divide this by 60% multiplied by 80%. When it comes to this one, I can just drag it, right? When it comes to this one, I can say this is for 80%. I divide this by I divide this by 80% multiplied by 100% to suit for this output level. Okay, Lama, right? This is what we call flexible budgets. So you can now see, right? Now think about if you simply prepare uh, budget only for this output level of 1,000 units, and if your actual output level is 800 units you produce, then you can't compare these budgets values are no longer valid for comparison if your actual output level is 800 units, right? So, but if you had prepare flexible budgets, something like this, you can you can simply match, compare your actual output levels with suitable flexible budget. Sometimes you might think, let's say you produce actually 70%, or let's say your actual output level is 75%, then you could easily incorporate another column representing 75%, right? So that's it. So according, this is the simple meaning of flexible budgets. I think you got this simple concept, and hope you all understood and study this well and get ready well. Thank you very much. Bye bye.